To build anything that truly lasts, it takes time.
Hi, good afternoon. You're watching Closing Trades right on ET now, and a little bit of a tempered move for the equity markets after that move that we had all through last week of a 2% gain. It's 150 points lower right now for the Nifty futures. We're still holding around, or hovering around, I should say, around that 25,600 print. Tata Consumer, Lodha, Maruti, Hero Motocorp, Axis Bank, these are your key pressure points in trade today. The breadth of the market, though, is still lingering slightly in favor of the advances, with 119 counts standing to the advances. But there is no directional or sectoral trend that one can really pick out in trade today, because even if you look at the list of gainers, there are a few banking names. SBI, IndusInd are all holding out. There's PNB, there's RBL Bank also, which is holding out. But then there's the BDL, there's the Canes, and there's Laurus Labs as well, which are also holding up in the market right now. But when it comes to the large cap universe, there's definitely pressure today. And one can see that with the names like a Kotak, Axis, Reliance, HDFC Bank. It's the big boys which are under the weather in today's trading session. But a lot of stock-specific action, right?
Well, indeed, and specifically from the pharma space, like we have been flagging off that deal that is finally through when it comes to JB Chemicals as well as Torrent Pharma. And Torrent Pharma will be having the controlling stake in JB Chemicals, and like we have been highlighting that there are a lot of synergies that can come into play specifically for Torrent Pharma, which will not only help them expand their domestic portfolio, get them into the top 5 companies in the domestic pharma space, having their presence rather in the CDMO space as well, and select segments like gastro as well as cardiac. These segments can actually do better for Torrent Pharma, and this is actually good for the company, despite the fact that in the very near term there could be some margin pressures initially. But the long-term picture looks quite robust. And on the back of that, Torrent Pharma is holding on to the gains of 2.5%, while JB Chemicals, of course, is languishing in trade. Other than that, it's another pharma counter, that is Alembic Pharma. On the back of the news flow, that stock is buzzing, wherein the company has received a US FDA approval for a cancer drug, though this will not contribute meaningfully into their financials, is what we have been flagging off. And even the Bloomberg consensus estimates is below the current market price, but indeed a lot of excitement is what we are seeing on this particular stock. And other than that, it's Karnataka Bank. On the back of that leadership churn, we are seeing the stock is down almost 6.5% as we speak right now. So a couple of these newsmakers are definitely making into the list, but all in all, it's been a day of consolidation largely, but on the last 1 hour or so, we are seeing the markets on the declining trend, while Nifty as well as Nifty Bank, they are languishing in trade. But with this, let's move forward and let's connect with our experts then. And we have been joined by Deepak Shinoi, who is the CEO of Capital Mind Mutual Fund, joining us on the show. Hi Deepak, morning, good afternoon rather, and thank you so much for your time. Firstly, help us with your take on the markets. It's been a fantastic run for the markets, especially the last week, which was indeed an expiry week as well. But what are you making of the market right now?
In some kind of momentum for mid and small caps. Even today, I think they're up compared to the larger caps. We're seeing some kind of there was a good run for the banking sector for the most part, and that's kind of, I think, maybe trickled into the public sector banks, but the private sector banks aren't doing so well. We aren't seeing major moves in credit growth yet. RBI released data on Friday. Again, not very inspiring from that perspective. Also, with the lowering of rates by RBI, we haven't seen banks go aggressively to cut down interest rates, mostly because banks are very afraid of losing interest on their existing loan portfolios. compared to having to give new people lower loans, so lower interest rate loans. So they don't cut rates, meaningfully, and that doesn't excite the economy because they will cut deposit but not lending rates. So to that extent, I think the economy is a little bit wary, but we're still growing reasonably well. The quarter numbers will start trickling in early July. I think that's when we'll know how good or bad this quarter was. By and large, the macro seems quite stable. The government finances have been quite good in the first. I think we'll get the data end of day today, but maybe the first 2 months of the year also, we will have seen government not having too much trouble in terms of its fiscal deficit. The rupee has stabilized or come below 86. So that way, it's a little bit better from an inflationary perspective, also from stability perspective for both importers and exporters. I think overall, market still looking for a meaningful trigger to move up. I think longer term, the core fundamentals of the economy, what's surging, what is not, I think those haven't changed much. We're still looking at defense, manufacturing, financialization of the economy. These are, I think, longer term trends that don't seem to be disturbed by anything that's happened recently.
That's the take on how the market is looking like to Deepak right now. Deepak, hi, good afternoon. Before we come to you for your thoughts on the entire banking space, like you mentioned, financialization seems to be the broader theme. Let's just bring our viewers the latest on what's happening with IndusInd Bank, because the bank has submitted the list of candidates for CEO position to the RBI. Sources tell ET now that the bank's management has sent 3 names to the central bank, and Ankur is joining us with more details on this. Ankur.
Yes, sources say that IndusInd Bank likely to have submitted 3 shortlisted candidates for being MD and CEO. Among the choices which has been given, the topmost choice have been given for Rajiv Anand, who is Deputy MD at Axis Bank. His term is going to end in August 2025. Apart from that, we also understand that Rahul Shyam Shukla, who is there at HDFC Bank, his name has also been shortlisted and given to Reserve Bank of India. And we also understand that Bajaj Finance MD and CEO Anup Kumar Saha, who is currently MD and CEO, has also been submitted to Reserve Bank of India as being choice for MD and CEO of IndusInd Bank. Now, this deadline was at June 30, which was given by the regulator, and for now, we understand that 3 names given to Reserve Bank of India will be scrutinized by the regulator, and after that, a final choice may emerge after the approval of regulator. We have seen that in IndusInd Bank in April this year, there has been several exits among MD and CEO and CFO after a probe revealed that there was an accounting loss, the derivatives accounting loss which was incurred and revealed on 10th of March, and series of resignation followed thereafter. Reserve Bank of India has approved a committee which is looking after day-to-day operations of the bank currently, but all eyes will be there who is the candidate which gets approval from Reserve Bank of India for being next MD and CEO of IndusInd Bank.
Okay, that's what the top brass at IndusInd Bank could look like, and the names which are doing the rounds. But Deepak, hi, afternoon. Just wanted to understand, I mean, we are at just what, 2% away from that all-time peak. Are you putting fresh money to work at all?
Well, we honestly, there is whenever there will be inflows, there will be investments, Aisha. I think we at some point there will always be opportunities in the existing portfolio you own, especially where there are there is tailwinds that seem to be getting stronger. Semiconductors, defense, manufacturing in general, high-end manufacturing, high precision manufacturing to be precise, is also a theme that I think is multi-year. So buying more at the current prices, some of which are elevated, but there is a tremendous amount of growth in the sector as well. So I think those will continue. Not so many fresh ideas, but as times go along, new things will come. There will be opportunities that arise. There are a lot of new listings as well. So as they pan out, we usually look at even say an IPO only after about 2 quarters, and some of the IPOs are reaching the end of 2 quarters now. So that might be that's another opportunity. We're kind of seeing whether some of these will give us meaningful upside from here. I think overall market will always have opportunities. There's always something to buy and there's always something to sell. So I don't think anybody just buys the market. Well, there may be some few traders who do, but by and large, as an asset manager, you have to be cognizant that some things will be highly priced, but some things will be, right priced or cheap in comparison with the growth that they offer. So we're always looking for those. Still looking at sectors rather than individual stocks so much, but the sectors we've chosen seem to still have a long way to go from here.
Okay, interesting. You say that, but hold on to that thought. We'll probe a little bit deeper into what that list looks like perhaps. Right now, we're scaling lower by about almost 0.5%, and that's pretty much the session low so far. It's not a deep damage regardless. We're still hovering around the 25,600 print for the Nifty futures, and select stocks are holding up on either side. Of course, Axis, Maruti, Hero Motocorp are the key pressure points in trade today. We will continue tracking markets and our chat with Deepak Shinoi on the other side.
Back to closing trades right here on ET Now. And moving on, in a big ET Now exclusive, sources tell that our colleague Prakash Priyadarshi that the government may provide almost 32,000 crore rupees as a compensation to OMCs to compensate the LPG related losses. Let's go across to my colleague Prakash, who is standing by with more details on this particular news. Prakash?
Yes, sir. What is more reassuring for the oil marketing companies is that the government may provide financial support soon. Sources are suggesting that the government is likely to provide rupees 30 to 32,000 crore compensation to oil marketing companies to cover the losses they are facing on LPG. A very significant development coming in. We're given to understand that the Finance Ministry and Oil Ministry have prepared cabinet note, and the relief is expected within the next 2 months after cabinet approval. However, the compensation amount will be released in tranches, but the good thing is that the process has been initiated. Along with that, the oil marketing companies' accumulated losses on LPG stands at rupees 40,000 crore, and we are aware that the government had increased special excise duty on petrol and diesel by rupees 2 per litre to compensate OMCs. Now, sources are suggesting that the process has been initiated as OMCs are still incurring a loss of rupees 150 per cylinder on LPG sales. Along with that, we are also given to understand that the Oil Ministry is working on a strategy to diversify the LPG import market to address the vulnerability, as we are heavily dependent on Middle East to meet our domestic requirement.
Okay, Prakash, thanks for bringing us all of those details. So these OMC counters are going to be in focus on the back of this ET Now exclusive. But let's move away from that and now welcome on board Kapil Shah, technical analyst at MK Global Financial Services. And Kapil, hi, good afternoon. Thanks so much for joining us. First up, give us your sense on what you are making of the market today. While we have seen a decline, it's not all that bad. It's just a 0.5% cut as of now coming in on the Nifty. Do you believe that today is a temporary one-off that we're seeing in the market, and let's say in the near term, we could once again pick up the momentum we've seen last week?
Yeah, first of all, good afternoon. So yes, means after a very long time, means let's say 32 trading sessions, the market has remained stuck in the range of 24,500 to 25,100, 200 level. And eventually we have seen the breakout on the higher side, and the market has taken out the very key resistance level like a 25,300, 25,500. And right now, today, the market is finding the reactions from the very old gap down area, which was created around the 25,700. So I find that, yes, this is what a kind of the mild resistance point, but the underlying structure of the market is quite positive, and it is going to remain or it will maintain the positive tone as far as the market is sustains about the 25,000 level. So this is what in the intermediate corrections after the strong upside momentum is happening, and overall breadth of the market is quite positive. Small cap, mid caps are trading on the positive side. So breadth wise, the market is still on the strong foot.
Deepak, I just want to get back to the list of sectors that you were talking about. And it's interesting that you say defense, because sure enough, it's a structural story, but one would question whether part of the meaty rally is already behind us or not. Where within defense are you adding more names? Is it more of the same? Or are you doing more deep dive into some of the specialty companies, drones, etc.?
Actually, it's drones. I think, I mean, they're all part of the overall architecture. Here, the core concept is simply that India is trying to move away from trying to be dependent or being dependent on foreign countries for arms for most of the defense needs. And we've seen this happen, reach a boiling point kind of thing recently, because you had a war with Pakistan, which many foreign countries didn't seem to support us. From that perspective, it's clear that India will have to make sure that its defense needs are met mostly internally. 2 years ago, the program, or 3 years ago, during the Ukraine war's initial phases, India started to diversify away from imports. We're the second largest arms importer, and we should not be. We should actually be a manufacturer of arms, and I mean of our own, for our own needs. And I think that's where the opportunity lies. So whether it is in the shipbuilding part of the things for the Navy, submarines, and so on, whether it is semiconductor based, or making systems for missiles and for other parts of the ecosystem, or even anti-drone devices. Lots of different companies with different parts in each one of them. A lot of large companies actually have their feet in multiple baskets, so they have defense subsidiaries which are likely to see substantially more business. So a combination of this is where we're looking at. And then there's downstream, because if you make a ship, you're going to have an engine. That engine needs to be manufactured domestically. There are a few companies that manufacture engines for ships, which are listed as well. So again, those are downstream beneficiaries. And lastly, I think overall, whether it is drones or some of the new technology pieces that are being used by the armed forces, I think a lot more of this will have to be developed, assembled, and managed from India. So that is also an area where you're going to see some movement. But at this point, it isn't clear who the clear winners are. So you're going to have to buy a lot of companies and then wait for which company can execute better, and then kind of double down on the ones that are winners. So our approach is like that. It's a nascent sector. I would say this will downstream benefit our manufacturing sector as well, because a lot of the input parts will have to come from domestic industry itself. So whether it is gears, or whether it is like I said, engines, or a few other things that come in, they will be manufactured by people who aren't only in the defense space, but they are relatively small today and can get large orders that make them attractive.
All right, so that's about the defense pack. But Deepak, within banking, interesting what we see today, that is the public sector banks are doing well, while the private banks, the names are lagging behind. But in comparison in both, we have seen the private names doing better. But the other fact of the matter is that, Deepak, for today, some of these beaten down names, case in point being RBL, Bandhan, they are doing very well today. Help us understand anything that is exciting when it comes to these names. Why is the investor or the trader confidence getting back?
That's a good question. I don't know about what happens on a daily basis, to be honest. So I am not the right person to comment. All I can say is overall, I don't think the banking system is at a situation where the default levels will rise tremendously from here. There have been pockets of concern in the MFI industry and so on, but I think by and large they're going away. And hopefully with lower interest rates, this will ease the issues in some of the banks that have seen stress on their book. Having said that, individual banks will move in any direction on any given day. There's no reason that I can attribute to it. If you wanted more structural concepts, then I'll have to wait for results to figure out if this quarter was better. But I think overall the banking system is actually stable, but it's not growing meaningfully, which is why some of the private sector banks, which were richly valued maybe 2 or 3 years ago, are not quite as richly valued. So if you make a 14% ROE and grow at 15% a year, you're not going to get like a price to book of 4 times or 3 times, and a price to earnings of 25 or 30 times. you're going to work with price to earnings of about 18 times, and growth of and price to books will be correspondingly lower at 2 times. So I think that way, the private sector banking consortium is constricted, but the public sector banks, which were relatively cheap, have consolidated and grown. So you're willing to give them a slightly higher price to book or price to earnings because their ROEs are starting to inch up as well.
Okay, Deepak, appreciate that view, and thank you so much for joining us on the show. On that note, we'll let you go. But time now to welcome on board Aditya Aurora, founder and multi-asset research analyst at adlytic.in. And Aditya, hi, good afternoon. Thanks for joining us. While we were discussing with Deepak about some of the banking names and what he's finding attractive from this entire financials basket, I want to draw your attention to some of these PSU banking names that are on a tear in today's trading session. The likes of Maharashtra Bank, PNB, Canada, sudden moves coming in of anywhere between 3 and 4.5%. What are you making on the charts for these names, Maharashtra Bank, PNB and Canada Bank?
Very good afternoon to you and to everyone. Absolutely, yes, the relative strength is fantastic in PSU banking space. Even we are seeing a great move in Nifty PSU bank space. So I think there is a lot of strength, underlying strength in this breakout or the momentum which we have seen today. If you talk about the index first, Nifty PSU Bank Index is currently trading at 7,200. I think there's scope for more upside over here till levels like 7,400 to 7,700. So complete PSU banking space is strengthful and has a lot of strength. So that is point one. If you talk about any names, then I like Punjab National Bank in this basket, which has seen about a move of about 4%. Breakout is seen over here, so currently trading at 110. One can be bullish over here with stop loss of 104 and target could be 116 to 120. And third stock which you talked about was Maharashtra Bank. So we are seeing good move in the smaller names in the PSU basket. This stock is also moving up with good volume. So we can say that there's a lot of volume support to this breakout move, which may not fizzle out, although market is losing strength, but we can expect relative strength over here in next few days.
All right, so that's about select counters when it comes to the public banking names and which stocks are doing well just now. But with this, viewers, time now to slip into a very short break. Don't go anywhere. We'll be right back with more on the other.
Let's revisit what the markets are sitting in at, because we've definitely ebbed off a little bit, about 0.5% lower, testing that 25,500 print. It's the usual suspects. The list of laggards hasn't quite changed since Hero MotoCorp, Maruti ahead of the monthly sales data, Kotak, Axis. You've got an Ultratech Cement, ICICI Bank, HDFC Bank, Reliance. These are your key pressure points. On the flip side, though, the strength in BEL continues, and it's put on another 1.5% in trade today. SBI has been going very strong. There's Eternal and Trent. These are all gainers as we speak right now in trade. But let's also welcome on board Nishal Maheshwari and find out what he's making of the market right now. Nishal, hi, good afternoon. Good to have you on the show. I guess the question on everyone's mind is, there is definitely that FOMO feeling out there because the market so swiftly from those March lows has caught up, and we're now just about 2% away from the all-time peak on the Nifty. Do you put fresh money to work right now or not?
Afternoon, Aisha. Thanks for having me. I definitely would put fresh money basically because I strongly believe that we are headed towards a new high in the market, and I think maybe it's only a matter of time. Come Diwali, basically, you will definitely be on a new high of a market basically. So I think if you are looking to invest, I think every dip is an opportunity to invest.
Right. And of course, the question is, where do you invest in? Do you buy more of the same financials? That seems to be the go-to sector, or a fewer defense names, or is there anything new, a bottom-up story that you're looking at?
I think the play basically at the moment is interest rate cut. I think that's a big play out there in the market. And the second thing is expecting that all what the government has done and the good monsoon will all actually play out as far as consumption is concerned in the second half of the current year. So you should be looking at doing something like BFSI, autos, a bit of FMCG. So I'm saying consumption as well as banking. I think that's a play basically, which should play out basically in the remaining part of the year.
Interesting that you say consumption, Nishal. Again, considering it's such a broad umbrella, what end of the curve of consumption do you think one can buy just yet?
So two parts of it. One is obviously I think the urban consumption still continues to be okay. The rural has started picking up, and that's where I would actually go out and look for a two-wheeler. I would go out and look for a certain FMCG names which might do well, basically, which are more focused onto the rural side. So I think that's where I would be looking to do consumption. But obviously the urban rich and urban rich sectors still continue to do well. So I think those are the two ends basically one should be invested into.
All right, so that's about the consumption space, but within consumption, let's talk about the auto sales data that is due tomorrow, and let's tell you what we are expecting on the auto sales front for the month gone by. So firstly, when we see the segment-wise contribution, so herein we are expecting that the two-wheelers as well as the tractor, these segments should do better versus what passenger vehicle should pan out on the number front, because this time again we are seeing that it has been quite a subdued response to the passenger vehicle sales. The companies are actually giving heavier discounts in order to push the sales, and a lot of these inquiries are now not turning into the actual sales when it comes to passenger vehicle segment, and so is the case of commercial vehicle as well, wherein a subdued sales data is what we are expecting. Let's talk about the numbers then. Firstly, from the passenger vehicle segment, all across the board, be it from Tata Motors, Maruti Suzuki as well as M&M, month-on-month decline is what we are expecting onto the sales data, and especially for M&M, the decline could be as much as 7% this time around. And that will be interesting to see that once again M&M manages to surprise us or not. But now let's put the spotlight on the two-wheeler segment. Here in TVS Motors as well as Eicher Motors, on a YOY basis, these companies can actually post a double-digit growth number, while for Bajaj Auto, nothing much is expected. But from Hero MotoCorp, we are expecting a sales data of 5.5 lakhs units, and in the two-wheeler segment, the key to watch will be the commentary, and especially the commentary related to the rare earth magnet issue, because last time the companies were very vocal about that. Now commercial vehicle segment, like we flagged off, nothing much is expected here. Let's see how the numbers pan out to be, because on month basis a very subdued performance is what we are expecting. And lastly, from the tractor division, a double-digit growth on a month-on-month basis is what we are expecting on the back of a favorable rural sentiment. Along with that, what we are getting to see is the base effect should actually kick in. That's about the auto space and the sales data that is expected. But quickly, if I can have your take, Aditya, on two of the two-wheeler counters that are expected to outperform. One of them is Eicher Motors and the other one is TVS Motors. Just on the chart check, and how is the technical setup looking like, if you can help us with your analysis?
Sure, I think TVS Motor clearly stands out. As you were also pointing out, the results could be a little better than expected. Numbers could be better than they expected. And even charts are pointing the same. After a stellar rally from 2,200 odd levels, the stock ran up till 2,700. And after that, we have seen simply consolidation, and no underperformance was seen when market was in pressure. And post that, we have seen good recovery or a fresh leg of rally in this counter. So I think TVS Motor stands out from the list, and I think one can expect outperformance in this counter.
In fact, we were just chatting with Vinkesh Gulati as well earlier today, talking about the overall trends which seem to be on the positive side, and that's what we can expect when the monthly data from Motown actually comes out. In fact, let's hear out what Mr. Gulati from FARA had to say.
Trends overall are on a positive side. If I compare June YOY, two-wheeler is on a growth, and automatically it has surpassed the last year June numbers already. The tractor is also growing. Passenger vehicle is a bit behind, but I'm confident today those numbers will reach, or it will be a very nominal difference. I'm still confident it will be similar like what June last year was. So overall industry will be in positive as compared to June last year, whereas at the start of the month we were a bit feeling a challenge because of a lot of external factors like war, then tariffs, and then this rare earth material story going on. The sentiments around weren't positive, but I feel the marriage season actually pulled it through, and the rural market, which is now slowly taking over, and the ratio is improving as compared to urban. That is where we got tractor two-wheeler is the clear indication that they are seeing the improvement. So overall, June year on year will grow. I feel most of the categories. Passenger vehicle, it could be a bit low or similar. I feel the numbers are looking fine as of now. Uh, Short term, the coming 2 months are still again a challenging month. If I talk about July and September,
Okay, so that's the word coming in from Vinkesh Gulati. But let's move away from autos. And Kapil, I want to get your sense on the sector rotation that we've seen in the month of June. And IT and realty on a month-to-date basis have been the biggest gainers. That was in the first half of the month. And after that, we've seen both of them tank or rather dip for the last, let's say, 8 or 10 days of this month. On the charts, are you seeing any scope of revival for Nifty, IT and realty?
Nifty, so of course the Nifty IT and reality in the previous months they have did quite well, and in the current context or in a recently brief history we are seeing there is some sorts of a price-wise correction is going in the reality, and then time-wise correction is going in the Nifty IT sector. But out of these two comparisons, I can bank on the Nifty IT sector. It is going through the time-wise correction, but the structure has improved, and we have some sorts of a cyclicality analysis of the Nifty IT, and since 2004 we have observed a one particular pattern. Okay, whenever this particular Nifty IT index falls, it falls for 35 to 36% from the top, and when it moves up, normally the upside phase is for the 2 years. So we are seeing that Nifty IT is corrected 35%, and then it has gone into some sorts of a time-wise corrections. Yes, there can be a little bit more pain from the price-wise and time-wise perspective, but whatever the declining momentum in specifically the IT sector that we see, we look it as a buy opportunity. And if the view isn't quite of the horizon is a positional one can hold the position for a quite good time. And within that, the second tier stocks like emphasis, persistence, we are preferring as a bet.
Interesting. Digital, soon we're going to be headed in for earnings. Where is it that you see some meaningful surprises coming in, and where do you think disappointments would persist?
So I think banking, you are going to see a bit of disappointment basically because the credit growth is not as strong as one would have expected. The measures which the RBI has done basically, I think, is yet to see transmission. So I think you might see some issues basically because as of yet you are seeing around 9-10% kind of a credit growth. So I think that would be one. IT would be obviously be a bit disappointing. So I think surprises are going to be far and few, and there are going to be more disappointments basically because overall we are expecting a subdued earnings quarter current this quarter and the next. So I think more disappointment than surprises. Maybe cement is one basically which I see. You might see surprises because last quarter also you saw volume growth which surprised everybody. I think this time it will be backed by prices also.
Right, but with this picks by both of our experts when it comes to the technical picks, then Kapil, you go first. Tell us which is the stock that you are tracking at this point in time.
Right. So today the pharma sectors we are seeing some sort of traction, and specifically the mid cap and small cap we are seeing the traction. So out of that space, I am looking at the Jubilant Pharma trading at a 1,210 or so. Stop loss is a 1,160, and upside potential is at a 1,280 level. So that is the worst thing. And second stock is a Trend, which is also showing us some sorts of a bullish continuation sign. So in the Trend, we are positive with a stop loss of 5,900, and on the higher side, 6,500 can be the target.
Alright, so those are the top picks coming in from Kapil. But Aditya, what about you? Which is the stock that is making to your list?
Yeah, so one stock from finance category, Aditya Birla Capital, despite the weakness in finance space and overall general market, this stock is showing clear-cut outperformance, and that is also supported by good volumes It has also engulfed previous day down move, so that's clear indication of strength. So this one is a buy at 277. Stop loss over here is 265 and target is 290. This is the first stock, and the second one is Ipca Labs. Today we are seeing pharma sector emerge from the lows, and we are seeing good relative strength, good recovery. Probably sector rotation or money flow is happening in pharma sector, and this stock is leading the rally. So this one is a buy at 1383. Stop loss over here is 1330 and target is 1440.
And Ipca Labs looking good to Aditya. But in a short while from now, all eyes are going to be on a very important macroeconomic indicator that we're tracking closely, and that's India's IIP data, which is the industrial production growth. Now, this for May is expected to slow to around 2%, with estimates ranging from 1.5% to 2.5%. The dip comes amid a sharp core sector slowdown to a 9-month low, dragged by a plunge in electricity output. However, strong momentum in cement and steel is likely to cushion the fall. Varun is joining us with what we can expect to see from the IIP data in a short while from now. Varun.
The IIP numbers are expected to come at 9 months low, and the average is actually 2.4%, that is Nirmal Bank's average, and also ICRA is expecting the IIP number to come at in the range of 1.5 to 2.5%. Now, if you look, the overall IIP would be supported by manufacturing, although the low IIP numbers, that is a 9-month low, actually reflects the marginal slowdown in the core sector growth and also slightly higher base. Now, the core sector number that has come at around 0.7%, which was at 9 months low, and the slowdown was basically because of the electricity production, which was down around 5.8% on a YOY basis. Now, the electricity production was basically down because of excess rain that was there in the later half of 2002, May 2025, and because of this, the electricity generation in that month were actually low, which actually pulled down the overall growth in the core output. Also, if you look at the coal production numbers, they were slowed to around 2.5% on a YOY basis in the month of May versus 3.5% that was there in the month of April 2025. No doubt the construction related sector, they did well in the month of May, but if you look at the overall coal sector growth, that was at 9 months low, and that's the reason you can see the overall IIP numbers coming at a 9-month low of around 2.4%, that is Nirmal Bank's estimate, and also ICRA actually has a bigger range of 1.5 to 2.5%. So keep an eye on this.
Well, PSBs definitely is where you're seeing some renewed action. In fact, the entire PSU pack has done very well even in the week gone by. So have PSBs. And selectively, you are seeing gains there today too. Look at a PNB, for instance. That's scaling higher by almost about 4%. There's BOB, which is higher by 3%. And then, of course, the large cap SBI, which continues to sit on a 2% gain. Nichal, any opportunities within PSBs after the recent run-up too?
I think the larger one, basically, SBI looks quite well poised. It has underperformed quite a bit. Basically, if you look at it, it's sort of a flattish basically in the last 6 to 9 months. So I think that could be a good breakout. Basically, I'm waiting for it to cross 825, and that's a place basically one can look at.
All right, so that's about PSB. Yes, of course, today they are doing very well. Like Snehi has been flagging off, some of those smaller names are doing well, and from the large cap space, it's SBI leading all the way and being the top gainer, and the second top gainer rather when it comes to Nifty 50. But other than that, within the pharma space, we also have Laurus Lab that is doing very well, and off late we have seen the momentum picking up when it comes to this particular stock. Aditya, just wanted to have a quick chart check by you. What exactly are you spotting with respect to Laurus Lab? Aditya, I guess you have to unmute yourself.
Sure. I think, am I audible now?
Yes, you are.
Yeah, so I think Laurus Lab has seen multi-week and multi-month breakout. Last high was seen in 2021 when Laurus Lab achieved 725 odd levels. So this breakout is coming after almost 4 years. So it has a lot of meaning to it, and a lot of volume back, price action back move is happening over here. So this rally may continue. It may not fizzle out quickly. and there could be more gains over here. So one should watch out until and unless it sustains above 700 odd levels, as it's in FNO also. A lot of call writers may be caught in 700 strike. So I think it has good strength above 700 odd levels, and upside levels one can watch out for are 770 to 850, and one can place stop loss at 680.
Okay, so that's the take on Laurus Labs. Kapil, coming to you, give us a sense on what are you seeing in some of these. Okay, so we'll move on from that, and in the interim, let's just talk about Karnataka Bank. This stock has been in focus ever since the get-go today. Remember, this stock was stumbling on the back of big leadership churn, wherein the MD and CEO had quit, followed by the company's ED as well. Meanwhile, we're now understanding that Raghavendra Bhatt has stepped in as COO, and the exits come amid board management friction after auditors flagged 1.5 crore in expenses without board nod. Ankur is joining us to tell us about everything that's been happening and the latest update that we have from the bank. Ankur.
Yes, in a surprising turn of events, top leadership of Karnataka Bank has resigned. MD and CEO Harsh Sharma resigned effective from July 15, and similarly Executive Director Shekhar Rao has also tendered resignation effective July 31. The bank has already made appointment of new Chief Operating Officer, and Raghavendra Srinivas Bhatt, who is a new Chief Operating Officer, his joining will be effective from 2nd of July. But for all these appointments, there will be regulatory approval which will be initiated, and bank has already formed a committee to look for a new MD and CEO. But what has been the matter so far? There has been some differences as per sources between board as well as management. Remember, auditors had flagged expense of 1.53 crore made without any board approval. However, the other side, the MD and CEO had earlier made a statement that this is a too negligible amount to look after. But we understand that expense incurred in consultancy and capital outlay, and it was recoverable as per the management. However, auditor issued emphasis of matter in FY25 accounts. But now, in the latest statement which has been released by the bank, Karnataka Bank clearly says that the matter is resolved amicably. So therefore, no such kind of differences remain as per the claim which has been made by the bank. But for now, the top leadership has quit Karnataka Bank.
Okay, that's what we're picking up right now on Karnataka Bank and the board versus management case right now. But Aditya, what banks are looking strongest to you right now? While there is pressure on Axis, one has clearly seen the shift towards PSBs, SBI, and then underperformers like IndusInd Bank, which are holding out.
Well, I think the leadership is clearly shifting from private banks to public sector bank. And today, all the private banks have underperformed, like Axis Bank, ICICI Bank, HDFC Bank. But relatively, very good move on the public sector banks. So the top pick for me in banking space would be Punjab National Bank, currently quoting at 110.55. I think a move of 5 to 10% over here shouldn't be ruled out. So this is a buy at CMP, and stop loss can be placed at 105, and targets which I'm watching out for are 115 to 120.
All right, so that's about the public sector bank, and PNB is looking good to Aditya. But Nishchal, the other thing that is looking good right now is the whole lot of chemical space, and especially specialty chemical. Anything that is looking good to you right now within this sector?
Yes, definitely. I think two spaces. One is the agrochemical side of the business, basically. I think given that there is a good monsoon, so domestically the demand has been pretty strong. So the agrochemical side of the business looks interesting as far as the chemical sector is concerned. On the specialty side, I think some of these companies, especially which are fluoride based, they are doing pretty well. So something like a Naveen Fluorine, SRF, I'm saying that is once again basically the space to be in. So I think these are the two spaces basically which look interesting to us.
Okay, so let's move away slightly from that. And Aditya, let's talk about the immediate near term, and that's tomorrow. In terms of tomorrow's trading session, given that we've already seen almost a 0.5% cut coming today, and we're close to the 25,500 thereabouts, we've been hovering there ever since the get-go. What levels are you spotting immediately for tomorrow's trading session on the Nifty and Nifty Bank?
Sure, I think profit booking is evident today, and although it's sort of range bound because lastly in last half an hour or 1 hour we have seen good recovery in the IT space, which has lifted the Nifty by 20 to 30 points. So I think neutral to little bearish bias could be seen tomorrow, and immediate short term support for the market is placed at 25,300, which was also about approximately the breakout zone for the market. So market could test the breakout zone and again recover towards the new high. So mostly I'm seeing a sort of neutral market. So this is basically a option sellers market, I would say, 50 points here and there. So I'm expecting a range bound market for tomorrow. If in case market dips to 25,300, it would be a buying opportunity.
Okay, that's that on the Nifty. But also hear it out from Nilesh Shah of Kotak AMC discussing how he expects earnings for different sectors to shape up going forward.
We believe some of the mid-cap IT companies will be able to outperform expectations. Now, please don't confuse numbers with the expectation. If a bad number is factored in and you deliver better than that, it will still be outperformance. Consumer discretionary, bearing consumer durable is one space where we could see against earnings beating expectations. Banking and financial services, on a selective basis, we should see earnings beating out expectations. The disappointment probably is going to happen more on a stock-specific thing rather than sector-specific thing. Albeit real estate seems to be slowing down. The top end of the real estate is still continuing, but the mid and bottom end seems to be slowing down. So there could be some earnings disappointment over there. Correlated to that, sectors which are very, very competitive, for example, paints, there could be earnings disappointment. Commodities on a higher base may deliver slightly lower than expected earnings.
All right, so that's the word coming in from Nilesh Shah. But with this, Nishal and Aditya, thank you so much for taking the time out and speaking with us, and Kapil as well, who joined us for the closing show. So just a few minutes left for the market to shut shop. It's been a decent day, almost a range-bound trading session. But yes, we are ending the day in the red almost. But a mild recovery from the day's lowest point is what we have seen for Nifty 50, while for Nifty Bank, that 2 index was languishing in trade with 150 odd points of cut as we speak right now. The culprit today could actually be India Wix, which shot up 4% at those initial trading sessions and now closing with the gains of almost 3% as we speak right now. But overall, it's been a news heavy day, especially with respect to some of these pharma companies. They did come out with a whole host of news, be it from Alembic Pharma. Laurus Lab was also in focus. Biocon did had its news flow, and well, of course, that big deal between JP Chemicals as well as Torrent Pharma as well. But with this, let me hand over to Ashesha to tell us that how did the market pan out in today's trading session. Ashesha.
Well, yes, turned out to be a weak day for Indian markets and a weak start to the week. Although we